Hello everybody, welcome back. Welcome to you all. How's everybody doing? A new week and a new mission to make more profit this week. How's everybody doing? I hope you're doing great. I hope everybody had a fantastic weekend. I know I did, and I hope you guys did too. So this week we are going to try to make more profit. We are going to continue looking for the best opportunities in the market to make profit every day. I welcome everybody who's watching. Thank you very much for being here. If you are returning, then that's a pleasure, of course. Thank you very much for your faith and interest. And if you are new here, welcome and come on, join the fun. So, of course, we are going to do the same thing as we did before, which is, of course, looking for opportunities in the market, looking for the best trading opportunities that we can find on the main trading instruments that you guys like most. So, with this being said, I think we should immediately move to the chart. And as always, guys, we start with the euro. Okay, so I'm going to start with the daily chart, of course. Let me check this. All right. Okay, guys, we are, of course, taking care of the chat because I want the chat to be there. I want to read your comments, and of course, you have to update that every webinar because every chat has a different link. So I was trying to do so. And with this, of course, we are trying to do that. And with this, of course, we are able to talk to you in a better way. And I will be able to see the chat that you guys are a part of course. And I'm going to be able to see your requests and your questions. And I will be happy to answer them all. So the euro, guys. Remember from last week, we talked about three plans. Of course, we had a recommendation, a direct recommendation with the price, with an entry price that is very close to the market at that time. And we had a backup plan to sell. That was a long position, long recommendation. And we had a plan to sell in case the price breaks below our support. And we had something else. We had a third plan, which is if the drop digged enough to reach 109.95, one of my absolute favorite supports for the time being, then we should initiate a long position. Remember this from last week? Buy at 9.95, stop 9.45, and limit the sky. I'm sure you remember that. Let's see what I'm trying to do here, and what we are going to try to do is to see if this is still valid, if a long position around 109.95 still looks like that fantastic idea that we had last week. Okay, guys, so okay, let me try with the chat one more time before we start. I really want this to work, but I'm sure this is the link, but I will fix that in a few minutes, okay? So, is buying at 109.95 still a great plan? Still looks good like it did last week or not? This is the first mission on today's agenda. This is the thing that we are going to start with. Of course, we're going to look at the daily chart first, or maybe the weekly even. Let's take a look at the weekly. Last week was not very kind to the euro, and there's a problem here. You know, we had 3 weeks of recovery up until October 18th when we reached that 2-month high. But the problem is that this recovery attempt stopped in a place that is extremely dangerous, and that is just almost exactly at the beginning of the moving average band. You know me, of course, I use the 35 and 49, and I really believe in the area between the 35 and 49 as a dynamic resistance or support. That can tell you a lot about the market direction. Failure to cross above or below this area usually means a change in the direction. And this is what has been happening for the past few weeks. October 18th, we reach a 2-month high. Fantastic atmosphere. 3 green weeks, the last of which is the strongest. So everything was looking great for the euro. Up until this week, where we started losing momentum in a stronger way than before. So 2-month high, some kind of retreat which was limited and was okay, not a lot. Now another attempt to recover on the week after that, and the last week we had a strong move to the downside, almost as much as this strong recovery attempt to the upside. So the euro is now entering the dangerous areas, the dangerous levels. And in my own opinion, one of the greatest and strongest defenders of the euro at this time is 109.95. Why is that? For that, we are going to switch to the daily chart. Let me explain why 109.95 is very important. Well, first of all, we had a recovery attempt, right? And this recovery attempt took the price up more than 300 pips from the 29-month low seen on October 1st. Now, this is great, but now we are correcting that recovery attempt to the downside. 109.95 is the Fibonacci 61.8 for the whole recovery attempt. And not only that, we do have a number of daily highs and lows extremely close to that level. On the way up, when we were rising, this is October 3rd. The high is 9.99. October 4th, the high is also 9.99, only 4 pips above our level. October 7th, the high is 10.01, only 6 pips above our level. And October 8th, the high is 9.96, 1 single pip above our level. This was on the way to the upside. And of course, after penetrating this support, this which is now support, of course, at the time it was a resistance. After penetrating it, the price dropped a little bit, only to find support extremely close to that level. This is October 15th, low 991. Can you imagine that? Only 4 pips below that. So on the way to the upside, we found a resistance around 995. On the way to the downside, here we found support very close to 995. And now we are getting closer to that level. It's a Fibonacci level. This is, of course, the main reason why we really care about it. But having these daily highs and lows very close to it, a good number, 6 or 7 daily highs and lows from October are extremely close to this level. Let's count them. 1, 2, 3, 4, 5. And here we have 6, and here we have 7. Very, very close to it. So when, of course, we always have several retracement levels to care about, but when you have a previous support or resistance that is very close to that, so to such retracement levels, that adds to their importance. And this is exactly the case here. What is adding to the importance of 109.95 as a Fibonacci level is the series of daily highs and lows seen all through October, or let me be more specific, through the first half of October, from October 3rd to October 15th. And that, of course, confirms the importance of such a retracement level. Now, if we go back to this level, we will be counting on a Fibonacci level and on an area that provided support and resistance in the past. Let me put the horizontal support resistance line here. As you can see, it is very, very close to the Fibonacci level. And there's also a third reason why this is important. Of course, you know, there are psychological factors in the market, and when we reach a price that looks important, that looks like a landmark, a price on the chart like $1.10, this is a psychological level. Above 110, below 110, this is how traders will look at the trading around this level. So it's a psychological level, it's a Fibonacci level, and it's a previous support resistance area from last month. 3 reasons to believe that this will be the support that we really need to care about. So it still looks very attractive to buy the euro very close to 109.95. And another reason, before I forget, is this is the last part of the recovery attempt. The last part is also started around this level. So everything looks great. Everything looks as an indication that 109.95 is important. And that is why we are going to continue depending on at 109.95, depending on 109.95, and recommending a buy at that level or very close to it. Now, what will happen when we get there? If we find support around this area, that would be great. That would be an indication that probably, and this is very exciting, guys, probably all the drop from the 2-month high seen in mid-October was a correction. And even it looks like a correction. If you are an Elliottician, you can look at this 3, and of course 3s are corrective in Elliott wave, and the wave principle 3s are corrective. This is obviously a 3-leg move. Moves that can be divided or counted as 3s are usually a good indication that the whole move is only a correction. So a correction to the downside after reaching a 2-month high. What will happen after that? Of course, we will resume attempts to recover. So this is a recovery attempt. This is a 3-wave sequence to the downside. Correction ends here. Now, what happens after that is that the next recovery attempt is expected to surpass the previous top from which this correction has started. In simple English, this means if we find support around 109, we will be expecting the next move to the upside to surpass 1183. And of course, we do. If we find support around 109.95, the bullish expectations will get a very serious boost. Now, the next level after that is 109.65. It is the 71.4 retracement for the recovery attempt. It's a level that I have discovered that I use all the time. I don't think you have heard anybody else talk about it, but I really believe in the importance of this level. And what I usually do when I find such a situation where the focus is at the 61.8 level is that I use this Fibonacci 61.8 level as a level to get in while I hide my stop below the 71.4. So plan C from last week still looks like a fantastic plan. Okay, guys, this is my first recommendation for the week. Buy at 109.95, stop at 109.45, 50 pips of stop, while limit is the sky. Because we are talking about levels above 112, and we have retracement levels for the drop from June top. One of them is at 1209, and the next is at 1260, and a third one at 1298. So when you buy around 110 and you are targeting levels above 112, then you are targeting more than 200 pips. In my own opinion, that is very easy to achieve if there's of course a condition, if we find support very close to 109.95. So I really hope the euro will find support to at or very close to 109.95, and then the fun will start for the bulls. So this is the basic idea that we are going to start this week with, the basic trading idea, the basic recommendation, or the number one recommendation for the time being. It is buying the euro around the Fibonacci level that we have not touched yet. Of course, we're very close to it. I think on Friday we got to around 10.15, right? Yeah, the low on Friday was 10.16, and of course that is very close to 109.95, only 20 pips. We could still drop to 109.95 itself, touch it, and start recovering again. Now, before I continue, this is the first recommendation for this week, for today. Before I continue, I just want to say hi to everybody. Julie, thanks for being here again. Hi to you too. Aaron, hello buddy, how you doing? Nick, my friend, how are you doing? Harry, I don't want to forget anybody. I don't want you guys leaving me because I forgot to mention anybody. So I really appreciate you all being here. Harry and Jaco. Jaco is asking about our broker. Of course, it is of course buddy QTime FX. It is our favorite broker in the whole world, and I am sure that you will understand why when I put this on the screen, buddy. As you can see on the screen, they are offering you the chance to trade with such amazing spreads, buddy. Unbelievable spreads. Imagine yourself trading with only 0.4 of a pip on the euro dollar and on the dollar yen, and similar very low spreads on other majors. So that of course will give you the opportunity to use any move in the market to your favor. Okay, and of course, Jacob, sometimes you find great spreads with a broker and you are very excited and say, wow, my God, these spreads are great. I'm going to open my account with this broker, only to find that the broker, of course, is offering you very low spreads, so they are not making a lot of money out of you. So they try to cover that with some kind of commission. And after you get in and you open your account and you're expecting very low spreads, and then, yes, you're getting the low spreads, but they are charging you commission. So what's the difference? Every trade you get in, you are paying commission. So it is basically back to regular spreads. No, not QTime FX. QTime FX is the broker who won the award for the lowest forex spread by the ACIFMA in 2018. Did you hear that? The lowest forex spread broker for the year. There is nobody who has lowest spreads without, of course, covering that with commission. So zero commission, very tight spreads, and of course, on the top of that, we are offering you $500 of bonus, real money, not trading credit, guys, real money bonus if you open your account with us. So contact us at fx_educast via Telegram, and let's open a real account for you where you can start implementing these ideas that we will be providing you. Of course, every day we are going to provide you with trading ideas with great setups in the market. And to see you apply that on a demo account makes me sad. Do you want to make me sad? I don't want to waste my time here and analyze the market with all my attention, with all my experience, only to see my fellow traders, my great group of traders and viewers who I love, all of you guys. I don't want to see you guys taking this effort and implementing it on a demo account. If you are extremely new to the market, it's okay for a while, for a little time, for a couple of weeks, but don't trade demo for 4 and 5 and 6 months. You will never, and I say this all the time to my traders, to my trainees, to my clients, you will never ever feel the real market, feel the real heat with a demo account. So demo account should be used as something to start with. Of course, as a new trader, you need that. You need the demo account in order to get used to how to get in, how to get out. Maybe you want to try a strategy and see how it goes. But after that, of course, you need to shift to real money. And it doesn't have to be a lot of money. Of course, in order to achieve good profit, you need a large capital. But as a beginner, if you are just beginning, my advice to you is on your first attempt, put only 10% of the money you want to invest in your account and keep 90% of the account for future purposes. Because no matter how good you are, as a beginner, you are expected to make mistakes. You are expected to click buy instead of sell. You are expected to say to yourself, well, this time I'm not going to use a stop. And then the market moves maybe rapidly, sharply, and your account will be seriously hit. So as a beginner, without having a mentor or somebody to watch over you who has a lot of experience in the market, you are expected to make the beginner's mistakes. Of course, that's why we call them the beginner's mistakes, because maybe 90%, maybe more than 90% of all beginners, they do the same exact mistakes. This is what I have seen throughout the 19 years that I have been in this business. Of course, starting with myself. As a beginner, I made a lot of mistakes that of course, when I remember doing today, I laugh at myself. How did I do that? But of course, you don't know the market. You still are learning. You are still getting familiar with an environment that you have not been before. So it's okay to make mistakes. It's okay to make mistakes as a beginner. But please, if you have someone around you, very close to you, who has many years of experience in the market, please let them guide you. And that, of course, and at least in my own opinion, will cut your mistakes in half, or maybe even better than that. And of course, in turn, that will save you a lot of money. Okay, another question from Nick. Nick, buddy, thank you very much for your question. Guys, Nick is asking, is Elliott Wave applicable? Well, of course it is. It has been applicable for almost 80 years now. And throughout these 80 years, people who like this method of analysis love it so much, to the degree that they defend it, and they say that the greatest events that affected the market were counted correctly in the wave analysis. So they say war, yeah, this wave, depression, financial crisis, everything was within the Elliott wave theory. This is, of course, what the people who really love it say. And my own opinion on the matter is that when the wave count is clear, go for it. But sometimes the wave count is really really mysterious. Let me use this word. It is mysterious. You look at the chart and you cannot count anything. My God, it's going up, it's going down, it's going up. When you say, for example, this is a flat, it goes way beyond the target. When you say that this is a triangle, of course, the triangles are one of the hardest things to trade when you are talking about Elliott, because within a triangle we may find, all sorts of changes between the structure of the waves, but sometimes the sequence is extremely obvious. For example, if we start recovering from here, from around this Fibonacci level, we have a three wave sequence. A three wave sequence that looks like this is very close to a zigzag. Of course, for the zigzag, I would love it if wave B did not reach this high, maybe a little less than that, but it's okay. It is still within the rules of a zigzag. And what comes after a zigzag is another move in the direction of the main trend, which in Elliott terms is called an impulsive or motive move. So we are looking for impulsive, motive move to the upside after the termination of this correction. In my own opinion, let me summarize again. Yes, buddy, it is applicable, but my advice to you, when you find an obvious count, go for it, trade that count. If it is saying to you that we are at the end of a correction, initiate your position in the direction of the main trend. If it says, for example, that the motive wave or impulsive wave is complete, then now you should expect a correction. And one of the good things about the Elliott wave theory, or if we want to use the right name for it, it is the wave principle. This is what Elliott called it. He called it the wave principle. But of course, people after him referred to it as his theory, Elliott wave theory, because Ralph Nelson Elliott is the man behind the whole idea. One of the best things about it is that there is a point where you can tell that this wave count that you are counting on is invalid or becomes invalid. Now, place your stop at that point. So if I'm correct, if I'm counting, for example, this as an ABC, of course, ABCs should not reach beyond the point that the previous move started from. So this impulsive or motive wave started from 108.78. If I buy around here, my stop should be just below here, not a lot, just below it, very small number of pips below it. So Elliott wave provides you with great stop levels. It can tell you immediately when a wave count is invalid. If you are, for example, if this is wave 4, okay, and this is 3, of course, then we will have 1 and 2 here. Once wave 4 gets in the price area of wave 1, that's it, then your count is invalid. You need to stop your position. So it is a great way to understand where you are now in the market, because the wave can tell you a lot. And of course, if you're familiar with this principle, then you know that each wave has a personality. The wave personality is one of the most important things within this theory. It can tell you what to expect. For example, wave 3 is usually a monster. It's very sharp, very fast, and it travels a lot of distance in the market. While wave 2, for example, usually takes the price back almost to the level wave 1 started from. So it attacks, let me say, or destroys the previous attempt to go higher. So wave 1, wave 2. What else? Also, wave C is expected to be sharp and strong and larger than wave 1 in most cases, or at least equal to wave 1. So these factors that you can use in your analysis and your wave count in order to know where you are exactly in the market, including wave personality and other tools within this principle, can help you a lot. Understand what to expect No, it's very important. If I'm on wave 3, I will not expect that to go up 50 pips, of course. If wave 3 is moving to the upside, then I will be expecting hundreds of pips. And so on. Of course, each wave has its own personality. Knowing the difference between these waves and knowing what to expect from these waves can be extremely helpful. After that, of course, incorporating every tool that this theory provides you with, you will find yourself understanding your current position in the market. And of course, that comes with a fantastic advantage of knowing exactly when to abandon your point of view. So if you are counting 1, 2, 3, 4, 5, if we are in wave 4, for example, wave 4 is at current prices, let's say 1020. The top of wave 1 is, for example, 980. The minute we drop below 980, you know your wave count is wrong and you have to abandon it. But as long as we do not do that, you continue to believe in your wave count. You know that you are counting the wave right and you will be expecting another move to the upside. So I really recommend you guys, Nick, and of course everybody else, I recommend that you take a look at this principle. But when you do so, another recommendation is you need to look at everything within it. Okay, there is nothing more dangerous in technical analysis and trading than knowing a part of the idea or a part of the knowledge or a part of the analysis technique. So when you want to put your mind into the wave principle, I want you to know everything. I want you to know all the wave types, especially the corrective ones. Of course, when we are talking about impulsive waves, they are very clear. They don't have a lot of types. But when we are talking about corrections, that is a larger catalog. Take a look at everything, guidelines, rules, and all the wave types, all the wave combinations. Of course, we can have, for example, double and triple corrections. And when you do, it's not going to take you a lot of time. Honestly, if we go back to webinars that can be classified as educational, we can talk about Elliott wave for a whole week. And then, of course, by the end of that week, you will be in the know 100% of all the wave types, rules, and guidelines of this principle, this great principle that we can use every day. So to summarize, guys, to end talking about Elliott wave, my advice to you is very simple. When the wave count is good, count on it. When you feel confused, when the waves are not very clear, then don't count on it at all at that time. Just completely forget about it until you see the wave count getting clearer again. Thank you, Nick, for that question. I love talking about technical analysis. You know me. I love talking about the educational aspects of technical analysis, the theories. So you guys, with this great question from Nick, let's go back to the euro. So this is our favorite trade for the time being. Now, another option, of course, before we talk about a counter plan for this one, let's talk about another option. What if? And for the what if, I'm gonna switch to the 4-hour chart and maybe even to the hourly chart. What if? I like this very much, guys. What if we don't reach 109.95 before we switch direction? What can happen then? Well, as you can see, we do have a falling trend line from last week. Actually, it was on Monday. Yeah, the high that we saw on Monday. This is it. Very early, just before Europe open, or maybe right around the European session open last Monday. The price was above or very close to the 1183, the 2-month high. We were trading very close to that for a good period of time before we started showing signs of weakness. And of course, with this weakness that we saw, the price started falling until it reached where it did late last week on Friday. So we had a whole week of dropping, we can say that. Now, as you can see, guys, there is an important resistance here. Can anybody tell me what is the important resistance that we are interested in here? Can anybody see something that looks really, really interesting here? Well, if you can, then I really, really salute you. And if you do not, let me tell you where it is. As you can see, guys, the falling trend line, from Monday's high is touching on the 7th, the 4th, and the 7th. This was Thursday's high, and now it's currently running around 1040, something around 1040. Okay, now what is really interesting about this trend line is that it is extremely close, guys, as you can see, of course, extremely close to the top of the moving average band. And you know me, guys, you know me, I love my moving average band so much, and I always use the same numbers. Of course, I have said this previously in educational webinars. We said that indicators can be personal. So to you, to me, we may use different numbers, but to each their own. This is the thing that I really believe in here. To each their own. Why am I saying this? Because you may use a number, I may use another number, and at the end of the day, both numbers can help us understand the market more, which is, of course, the target. This is what we are trying to do here. We are trying to understand how the market works. So if I use 35 and 49 for the moving average as a band of moving average, that does not mean it is the only number you can use. You can try your own number, and then of course you may find the numbers that you find really helpful and the numbers that will help you understand the market most, which is of course what we are trying to do with indicators. So if you have another number that makes you feel like you understand the market, then please go ahead and use it. But if you ask me, which numbers do you use, Munther? Well, the answer is very straightforward. My favorite moving average band is the moving average 35 and average 49. Between these two moving averages, I really believe that usually we find an important support and resistance, support or resistance. So with this being said, as you can see, guys, just take a look at this hourly chart. You can easily see that the top of this moving average band is very close to what? To the falling trend line. Both of them are currently running around 40. If you want to be more exact, if you want to be more specific, we can draw a horizontal trend line and look for what levels can we think of for now as the real support. In my own opinion, this is Friday's American session high, 10.8. I really believe that this is the resistance that we need to care about. Now, the trend line is around 4 pips above that, but of course it's a falling trend line every hour, so it's going to drop a few pips, and it will take maybe 3 or 4 hours for these two to meet, something like that. Not a lot of time. By that time, I really want you guys to focus on what? On 1038. So if you want to trade the euro for today, your resistance is 1038. What does that mean? It means if we start trading above 1038, then that is a good enough reason for you to go long. Okay, this is my other recommendation. If we don't fall enough to touch 109.95, And then guys, what I want to do is I want to buy a break above 1038. Maybe 10 pips above that would be enough. So let me put this on the screen for you. This is the second recommendation for today. Buy at, we said 1038 is the resistance. I usually use 10 pips for the euro above resistance or below support as an entry point. And that, of course, means buy at 1048. When you trade with QTime FX, you don't have to worry about the spread because it's very close to zero. But when you are trading with another broker, for example, I cannot believe this, but it is there, guys. I have seen this with my own eyes. A trader came to me. He opened an account, broker. He was asking me about this broker after he opened the account with, and I'm not going to name this broker, although I should warn you about it. They have a 3 pip spread on the euro dollar. 3 pip spread like it's 1985. This is so outdated. No broker for this kind of harmful spreads anymore today because of course it's first of all it's not good for the traders, and there is competition between brokers to offer the best spreads, the best trading conditions for their clients, and that is why we stopped using these horrible spreads a long time ago. So for me, if I want to place an order to buy at 1048, that is because I trade with QTime FX, my favorite broker in the whole world. This is my real account with them, and because the spread is only 0.4 of a pip on the euro dollar, I can place my limit at my entry stop at 1048. If I was trading with a broker that is offering me a spread of 3 pips, then this will not work. I will immediately place it at 51 instead. So you see, guys, do you see how this is an advantage for you? This is a great advantage for you to be able to just forget about the spread because it's very close to zero. So 1048. So 1048, guys. Now what about the stop and the limit? 1048 means here, the minute or a few pips above this trend line moving average band, I want to be in, because breaking above trend lines is of course bullish. Crossing over moving average bands is of course bullish. So when it is bullish, I want to be on the long side of the market. So it is this or that. So let me leave this on the chart. Buy at 109.95 or 110.48, whichever comes first. And not for technical analysis reasons, the long position is justified at these levels, at both of these levels. But for risk management reasons, I always say to my clients when I issue 2 signals in the same direction, I always tell them to, when one of them is in, you need to cancel the other order. We don't want to be in with a double position. We always need to think about risk in this market. And when you think about risk, you don't want to hold 2 positions in the same direction, unless, of course, you are adding to a winning position, and that should happen after the first position is achieving good profit. But usually, as an entry point, if the price drops to 109.95, we get in and we cancel our order at 1048. If we start rising and we touch 1048 and we are in, we need to cancel the other order at 109.95. And I repeat again, guys, this is for risk management reasons. It's not for technical analysis reasons. Okay, so where is my stop and limit here? Stop at, and I'm gonna give you 2 targets, target 1, target 2. My stop, if I can place a stop below 109.95, that would be great. How about 20 pips below? Yes, that sounds perfect. 109.75. 25 pips and 48 pips, that's 73 pips. It is within the reasonable stop loss that we usually use. It's not very large, it's not very tight, so it is, in my own opinion, it makes a lot of sense. You know my ideal, or if you are returning to this webinar, you know my ideal stop is between 60 to 70 pips, so this is very close to that, and that is why I like it so much. The stop is fantastic. Now, what about the targets? Now, if we start rising and we break above this trend line, guys, then another recovery attempt will be born. And the first recovery attempt took the price higher 300 pips and topped at 1183. Now, the next attempt should be expected to at least target 1183. I'm sorry about that, guys. 1183. And in fact, if you want the truth, what I really believe in is that we are going to surpass this. But I'm going to place my initial target here, or maybe because it's more than 100 pips. Let's this be target number 2. I know some of you guys, the small targets, just give me my 30 or 40 pips and let me close my position. Others prefer targets that are more ambitious, 100 pips or more. In both cases, I'm gonna provide you with targets. So target number 2 is going to be 1183, 135 pips. So 135 pips. Now, what about target 1? We want a target that is much closer than that. And for that, we can use retracement levels for the drop. Retracement, retracement, retracement. We always use retracement. Munther, you are using too much of a retracement. There is nothing called too much of a retracement. If you use retracements every minute of every day, in my own opinion, you are not doing enough, because retracements are magical. Sometimes they can really indicate fantastic turning points in the market, and I love them so much, and I use them a lot in my analysis. They have given me a lot of fantastic trades, and I count on them every day. So if we want to calculate the retracement levels for the drop from last Monday's high, the first one is 1076, and then we have 1095. And between these two, as you can see, we have two price tops that are very close to the 50% level, but they are actually between the two, between 38.2 and the 50% level. The first of which is 93, and this one is 92. So I'm going to place my limit at 92. 1092. How many pips is that? Let's calculate. 44. So we have two limits. One is 44 pips and one is 135 pips, while our stop is of course at minus 50 pips. This is the recommendation for now. This is the second recommendation on the euro. The first, let me remind you, I'm going to keep them on the screen. It is buy at 109.95. My stop was 109.45, and my limit, instead of saying the sky this time, I'm going to give you actual numbers. Target 1 and target 2. Target 2, I know my target. I love 1260 so much. I really believe that we can go there. But we want, of course, a smaller target for this trade. And honestly, you know, if we got lucky and bought at 109.95, it is a waste if you close this position with a profit of 30 pips or so. But I know some of you guys like these things. So let me look for a closer target. If we get to 95 and then we start recovering, well, this bottom here should work as a target, and it's 35. How about that, guys? 10.35. Only 40 pips. 40 pips and 265 pips. These are the targets for the two euro recommendations for today. I'm gonna place them here so you can take a look at them before we take our first break of the day. And I'm gonna talk about them, summarize our trading ideas on the euro before we take our break. So buy at 109.95 or 10.48. If you got in at one of these two levels, please cancel your order to get in at the second level, the other level. Now buy at 109.95 comes with a stop at 109.45, 50 pips. Actually, this is not 50. We said 73, but yes, 73, guys. Okay, so here we have a 50 pip stop. We have a target of the initial 40 pips, and the second target is really, really ambitious, 265 pips. And of course, that will need a lot of time. We're not talking about a target that can be met in 24 hours. I do not imagine touching 109.95 and then 24 hours later we are at 1260. It will, of course, even if we got there and this prediction or out to be a fantastic one, we still need more time to get there. If we did not drop and if we start rising from current levels and break above this falling trend line, then I want to be in at 10.48. And let me write it this way for the new guys, 10.48. Our stop is 109.75, 73 pips. Our first target is 10.92. And our second target is 11.83. And that's it, guys. These are the recommendations for today. Do you want to be sell? Do I want to be short? Well, of course, breaking 109.95 with a good number of pips indicates more weakness. But for today, let's skip that. If we feel that tomorrow there are more signs of weakness, more weakness signs, then we will initiate or at least issue a recommendation to short the euro. For today, I don't want to issue a recommendation to short the euro. I just want you to follow these two recommendations. And of course, a reminder, by the end of the European session, if the orders are not hit, then please cancel them. So I want to be in long position at one or the other, not both of them, buy at 9.95 or 10.48 or, okay? Buy at 109.95, stop 109.45, target 10.35, target to 12.60. The other recommendation is buy at 10.48, stop at 109.75, target 1 is 10.92, and target 2 is 11.3. With this, guys, I'm gonna leave you. I'm gonna take my first break for the day. Thank you very much for being here. It's going to be only a few minutes. After that, we're going back to talk about more trading opportunities in the market. We're going to talk about gold. Gold dropped hard on Friday. Is that an opportunity to buy some gold, or is it? We'll see after the break. For now, I really want to thank everybody who's watching. It's going to be a very short break, only 5 minutes, and then we will be back. For the time being, I really want to remind you that this event is a generous sponsorship by QTime FX, our favorite broker in the whole world. QTime FX, guys, offers you the chance to trade with near zero spreads. They are very, very low spreads. For example, on the euro dollar and the dollar yen, it is less than half a pip, as you can see on the screen, guys. 0.4 of a pip on these majors, and similar very tight spreads on other major instruments. And that, of course, will give you the opportunity to capitalize on even the smallest moves in the market. So come on, contact us at fx_educast via Telegram, and let's open this account for you where you can. First of all, you can get $500 on us, withdrawable free bonus. Not trading credit, guys, withdrawable real green money. Okay? And of course, you can implement the trading ideas that we are providing you with on a real account, and you can taste the sweet taste of making money in the market. So that's it, guys. 5 minutes, a very short break, and then we will be back. Take care. See you in 5. Okay, guys, we're back. We're back after this short break. I hope you are still here with us. I hope you are still looking for great chances to trade the market. And that is exactly what we are going to do right now. We are going into our second hour, looking for more opportunities. We are done with the euro. Now we are moving to the next big thing, the number two instrument that I get asked about every day, which is, of course, gold. Before we continue, let me remind you that this webinar is sponsored by QTime FX, our favorite broker in the whole world, who is offering you fantastic spreads, zero commission, and on top of that, $500 of a bonus, withdrawable bonus, guys. This is the magic word, withdrawable bonus. Okay, so contact us at fx_educast via Telegram, and let's open the real account for you, where you can start trading these trading ideas that we are giving to you each and every day. Don't waste this opportunity, because the bonus is not going to be there forever. So use it while it lasts. Come on, get yourself $500. That would be a fantastic way to start trading with us. Okay, so let's go back to the market. Gold. Okay, now, first of all, I want to take a look at the daily chart. As you can see, the past few days have been hard on the, and especially late last week, we dropped from levels that are above 1490 to levels that are below 1460. That was a hard hit for the precious metal. Now, the question is this a good area to buy, or should we expect more downside action? This is very important. Just adjust this, yeah. So, if we take a look at the last part of the very strong move to the upside, which started in April, this is a medium-term move. Of course, we're talking about a daily chart. If we take a look at this move, we can see that the correction, which is mostly sideways, it's a little bit leaning to the downside, but you can say that it's sideways correction. The correction did not reach the 38.2% retracement level yet. This level is at 1446, so maybe we still have a chance to push a little bit lower until at least we reach this level. Keep this in mind, but of course this is not the main factor in analyzing the precious metal for the time being. What about the indicators? As you can see, RSI is very close to the oversold area. We did not get in the oversold area yet. And that's a good thing, because when we get in the oversold area, that might be an indication that we are in a downtrend. And if you take a look at that daily chart, we have not been inside the oversold area for quite a while. Why is that? Because the precious metal is very, very strong recently, even with these kinds of corrective moves that, of course, they will have to appear. Even if the move to the upside is extremely strong, you will still find these moves to the downside. So it's not a big deal if we have some kind of downside movement. The RSI is saying this. RSI, we are still strong. We're not inside the oversold area. And if we start changing direction from current levels in the RSI, that would be great, because when this happened in the past few times, that was fantastic for gold. This is my example. This is my favorite example. Just look at this. Just before this explosion to the upside, we dropped to the, let me say, to the borders of the oversold area, as you can see here in April, and then we started recovering again, and with the recovery of the RSI, the price exploded to the upside. Can this happen again? Of course it can happen again. Remember, guys, the dollar got 3 rate cuts this year, so gold is attractive. You cannot have a dollar that is going through a rate cut after another and expect gold to collapse. You know that usually that is a very hard thing to happen. So we do have a chance. Another thing that we need to care about is the stochastic indicator. The two lines, the fast and the slow, are getting very close to each other. We are looking for a cross. If we get this cross, then things will start to get very good for gold. This is a daily chart, remember, so a target for a cross on indicators should not be 50 or 100 pips. We need a lot more than that. If we get a cross on the stochastic, or if the RSI gives a signal, or the MACD, any one of them. We're talking about the daily chart on a very volatile instrument. We're not talking about small targets. So it might be the time for gold to start its very strong move to the upside, the next strong move, because we have seen very strong moves, especially starting from the time of the first rate cut, July 31st. As you remember, of course, we were trading around 1400, and no, not this one. Yes, this one here. We were just above the 1400. The low on April 1st, which was, of course, seen during, I think, the Asian session, and then everything exploded, was 1400.65. So is it time for another move of this size, this gigantic 1,570 pips to the upside? I do not see any reason why not. We have monetary policy that supports that, and we have been dropping. We have dropped around 1,000 pips from the highest prices seen during this uptrend, so it might be the time to do so. Okay, now guys, what I really want to see here is if there is a resistance that, when broken, will give us an indication that we do have a chance of moving to the upside in a strong way. And one other thing, I want to count the waves in front of you and see if there's a possibility of this correction to the downside being over. It's very important. Of course, if it's over, that means the timing could not be better to get on the long side of the market. Okay? So let me see. Okay. First of all, we can use, of course, some kind of correction. The tool to count corrective waves. This looks like a great ABC move. One of the things that can support it is the retracement levels between A and B. It's very close to 61.8, and then we had a C to the downside. They, of course, A and C do not have to be exactly the same, but when they are very close to each other in size, that is a good thing. And I have not, to tell you the truth, I have not calculated the size of these moves. Let's do this together. But from the look of it, at least they are close to each other. They don't have to be exactly at each other, as long as each other, but they are very close to each other. The high here is 1557. The low here is 1484. That is 730 pips. So this high is 1535.36, something like that. If we take away 730 pips, that means we need to be around 62 here, and the low is 59. So we are around 30, 25, 30 pips larger in C than in A. And that, of course, when we are talking about 730 pip move, nothing. So it is almost exactly the same size between A and C. And this, of course, indicates that counting these waves as ABC is a good idea. Now, when the correction is very small compared to the previous move, like in this case it's very small, did not even reach the 38.2. When this happens, usually we do have another part of the correction. And in the middle, between the two parts of a correction, we have an X wave. So this is X, let me label it. X wave. The move up from the bottom of C up until maybe this top here is wave X. Again, can I count another 3 to the downside here? 1, 2, 3. This can be, well, yeah, we can, but the internal structure of wave C looks incomplete. We can count it as this. Of course, inside C waves, we need to see a 5-wave sequence. We can count this as 1, 2, 3 is very strong, and then maybe we'll have 4 here, but we do have to see 5 to the downside in order to make this wave count more reasonable. So I want to see another low. This can still happen. I'm going to keep this wave count on the chart, but I'm going now to look for evidence of a rising move. So I'm going to use the indicators first of all, but not only the indicators, of course. I'm going to use the trend lines as well in order to estimate if we do have a move to the upside. Let's take a look at the indicators one by one before I take a look at your comments on the chat that I really like. Okay, well, first of all, the MACD on the hourly chart is showing signs of strength because the distance between the MACD itself and the signal line is getting larger, as you can see here. Can you see this? We are getting apart on these two lines, and of course, when this happens, there's a sign of strength. If the MACD line is, of course, moving to the upside, if we were moving to the downside, that is a sign of weakness. So we do have a sign of strength on the MACD. The stochastics and RSI are both pointing to the upside. Okay, they are both pointing to the upside, as you can see. They are moving, sloping to the upside. I like that very much. I like that a lot. Okay, so there is a chance for gold bulls. However, after looking at these beautiful things here, let's focus on the moving average band. However, as you can see, we are only starting to challenge the moving average band here. And the bottom of this band is almost exactly at the current daily high, 64.48. Can you see this? This band stretches to around 68. So within the next 40 pips, guys, within the next 40 pips, we do have some kind of resistance. If we overcome this kind of resistance, if we overcome this area of resistance, if we overcome the moving average band, both moving averages, then we are ready to achieve some profit. We are ready to, of course, how can we do that? With a long position. So I need gold to show me more strength before I jump in. Now, there are two scenarios. The first is that we fail to break above the moving average band and we fall in a fifth wave. In my own opinion, it's a much needed fifth wave toward the 40s. Okay, so if I see 40s, that would be very good. I would really believe in a long position initiated very close to the medium term Fibonacci 38.2 level, which is around 1446. Keep this number in mind, guys, 1446. Okay, this is a very important support from which we can start initiating long positions. Maybe not one, maybe we'll be adding on the way up because we are expecting gold to explode. But the question for today is this: is it going to explode from current levels, or is it going to dive further before the very strong move to the upside comes? And one of the most beautiful tools that you can use to identify the chances of this happening or this happening, of course I'm talking about recovering from current levels or dropping further before recovering, is the moving average band. I love this band. I really believe in its strength, and I'm going to use it today as an indication of strength or weakness. So if we start trading above the top of this band, then I would recommend a long position immediately, without waiting for a drop towards the 40s. But if we see the price struggling to overcome this band, guys, then my own opinion would be this: we are dropping towards 1446, and from there it could be, of course we cannot judge from now. We need to see what the price will do around there. But from where I stand, 1446 could be a fantastic level to initiate a long position, not for the short term, for the medium term. We're talking about hundreds upon hundreds of pips. So are we going to buy? Yes, if the price starts trading above the moving average band. The moving average band is around 68. So my recommended, of course, I need you to watch the price, guys, because we are not there yet. So maybe when we get to 1469, we see signs of weakness. So I want you to be smart. I want you to look at the chart at that time and judge for yourself if this is a good idea. But from the current chart that we are looking at, buying at 1469 makes sense. Now we need to stop, of course, and we are going to give you two targets as usual. A target for people who don't want to wait too long, and a target for people who want to target higher levels and much profit. Now for this, I'm going to switch to the 15-minute chart, and I'm gonna see this recovery attempt from the lows seen late last week. As you can see, guys, we do have a support around this area. In my own opinion, it's the lowest close here. The lowest close here is 56.8. The low here is 57.6. So 8 pips between these two levels. In my own opinion, these are the 8 pips that we need to care about. Okay. The bottom, the lowest price seen late last week was 56. So honestly, it is very hard to place a stop above this, but I'm gonna try for your sake, because I don't want you to suffer a large stop in case we are wrong. I'm gonna use this and this. Fantastic, fantastic. Okay, so the 61.8 retracement level for the recovery from Friday's low, or actually the low seen late on Friday, not Friday, this is Friday's low, but the intraday low seen late on Friday. From this low up until here, we have retracements, of course. We're going to calculate the retracements. The 61.8 is at 1460.2. And as you can see, the rising trend line from Friday's low, let me make it clearer for you, is currently running very close to this level. And of course, This is 15-minute chart, so every 15 minutes that's going to go higher 1 pip, maybe 2 pips, something like that. Eventually, they're going to later in the day after a few hours, and that is why I want to use 60.2 as my level for stop. As long as we are above 60.2, I will recommend holding a long position, but if we start trading below 60.2, then I think we need to get out. 60.2, I'm gonna place it 59, sorry. I hope we get to that number. I just wrote 1500. I really do. Now, what about the targets? So stop, of course. Sometimes the stop is a little more than we wish it to be. We are talking about a very volatile instrument. That's why stop for gold here is 98 pips. It's not 50 or 60 like for the euro or something like that. This is a very volatile instrument. That's why I prefer to keep my stop a little bit further from the end level. So buy at 1469, stop at 1459.2, and our limit, I'm going to give you 2 limits to on the way higher. This is very important. And this is very important in terms of elite wave. This could be the top of wave 4 of 1 lesser degree. This is 5, 3 or 5, 4 or 5, 5 or 5, A or 1, B or 2, and now we are starting 3 or C. In both cases, we are expecting a strong move to the upside. Now, this is, of course, 73. The high is 73, yes, and the next high is 94. So if we surpass 73, I want you to watch 73. I'm not gonna, sorry about that, I'm not gonna put a limit at 73. I'm gonna just write watch out for 1473. When you are in a profit of 40 pips, of course, if you buy at 69 and the price reaches 1473, when you are in profit of 40 pips, I want you to watch what happens around 1473. If we penetrate above that support resistance, it's a resistance now. If we penetrate above it, then your position is going to do great. And we need to now look for a target above the 73. In my own opinion, this one looks fantastic. 79.2. 102 pips of a limit. This is our initial target, and our second target is going to be the top of wave 4 of 1 lesser degree. If you know your elite wave, you know that is one of the best targets that a good wave gives you. And as you can see here, I'm talking about, of course, this one. In this case, I assume that this is 3. Because, of course, as you can see, it's sharp and strong. And this is 4. This is 3 of 5. The other sharp move that we can see, this is wave 5, of course, 1, 2, 3, 4, 5. As you can see, so this is a sharp move, 3 of 5. This is a 3, wave 3 itself. And this leaves us with this high here, November 6th high, as the top of wave 4, which is 94.30. So this is what I really believe in for today. If we get to 69, we buy. Some of you may say, well, Munther, 69 is a bit far. Don't you want us to get in before that? I'm sorry, guys. I would love to get in earlier than that. But no, because if we stop inside this moving average band, then we can easily drop to the 40s, easily. I don't want that happening to you. I want you to buy only if the price is above the moving average band. I don't want you to buy inside the moving average band and then the price stops here and it starts falling again in what could be 5 of C, and you will be, of course, very unhappy about your stop because it's going to hit your stop then. So 69 for now. Maybe a few hours later, if the moving average drops significantly, maybe 10 pips, 20 pips, then this should be lowered 10 pips, 20 pips, depending on this. Okay, guys, so currently it's around 68. A few hours later, maybe when it's 67, 66, I will update this. And I really hope we still have an hour and a half. Maybe we can take a look at gold later during this webinar and update the entry level. This is it. Now, the other possibility that I want you to consider is this: a drop towards 1446, which is the long term, or at least let's say the medium term Fibonacci 38.2 retracement level. For now, I don't want to issue a signal to buy around 1446, but if you see that, and if you see that there are signs of a bottom around there, if the price is showing you that it's trying to recover after getting very close to 14 or touching 1446, then yes, a long position around 1446 would make a lot of sense. Okay, guys? Now, what about, do we have a trend line that we need to care about? Maybe this one. Let's see where this trend line is running currently. It is, yes, it is at 75. With time, it's going to get to 73. And of course, as you remember, 1473 is a resistance that we need to care about, especially if we are having a long position at that time. 1473, let me show you what will happen. That's, of course, 1473 talking. Let me show you what will happen to gold. If the price fails to overcome 1473, then it might be time to close the long from 1469, even with 30, 35 pips, 25 pips of profit, anything like that. It does not matter. But if we go through 1473, if we penetrate above this resistance, in my own opinion, guys, we are at least going to 1479.2, at least. That's why I'm placing my target here at 102 pips. And of course, I really believe that penetrating 1473 and showing signs of strength around 1479.2 pushes the target higher towards 1494.3, which leaves us with 253 pips of profit. Keeping my fingers crossed. I really hope this happens, and of course tomorrow we're going to see if it does or not. So this is the signal I'm going with now for gold. And as I told you guys, I really hope that before the end of this webinar we are going to update the entry level, maybe lower it to 68 or something like that. Okay, so this is it for gold. This is it for gold, guys. Screenshot it, write it down, place it immediately on your platform. I know I will. I'm gonna buy stop on my real account with QTime FX. I'm gonna buy at 1469. My stop is 1459.2. And I'm going for the jackpot here, 1494.3. I'm not going to use the first target. I'm going to use the second target. As you can see, guys, and place. Yes, buy at 1469, stop 1459.2, target 1494.3. Keep your fingers crossed for me. If this happens, I'm going to be a very happy man. 253 pips on gold. I really hope you too can achieve this kind of profit. So this is it for gold, guys. And before we take our second break, I am more than happy to take a look at your comments. And if you have any requests, of course, my agreement with you, let me remind you, I'm going to analyze any market you like as long as I have a chart for it. With a smile on my face, just request that on the chat and I will be more than happy to do it. So, Ram Heinz, Munther, do you trade gold much? I trade gold extremely much. It's probably gold and crude oil are the two things I trade more than currencies. I know most of you like currencies a lot, and I do. Of course I do, especially for the euro now. Remember that we have a long-term bullish wedge formation that we are following can result in a move of more than 1,000 pips to the upside if this formation is confirmed. And I really enjoy trading euro, yen, Canadian dollar, and New Zealand dollar. These are the instruments that I really like. Euro yen also. Other currencies I don't trade much, mostly crosses. Also, I like the pound Canadian. I love that so much. I love that pair. The pound Canadian is one of my favorites. But at these times, with the rate cuts on the dollar, of course I trade gold much. It is something that is extremely related to the Fed, to what the Fed is doing. The relationship between gold and dollar, of course, everybody knows that. It is an inverse relationship. When the dollar is going higher, of course, gold is going to go down and vice versa. And with rate cuts on the dollar, it might be a great opportunity to go long on gold. And I really hope that tomorrow, as you can see, the price here at our QTime FX live trading platform is 1465. I really hope that we will be talking about 1425, 1485, 1495 in tomorrow webinar. Okay, so wish me the best, guys. I'm trying to make some money on the move to the upside, and I really hope so. Now, if the move did not come today and if we start falling, that means we need to ditch our attempts to go long on gold at current levels. If our stop is hit, then you need to wait. You don't initiate another position. I know that's what a lot of traders do immediately after their stop is hit. Maybe 10 pips after that, they get in again. That's a mistake because you place the stop here for a reason. If the price gets to your stop, why are you buying again? So don't do that unless or until we reach 1446 or approach 1446. Okay, so I really trade gold mines a lot. Michael, I'm starting to believe that gold is for swing trade. Of course it is. It is an instrument that moves a lot, but of course with reward comes risk. When you're getting the yen, 50, 60 pips of a stop loss is good enough. Sometimes 50, sometimes less than 50 is okay, but you cannot use 30 and 40 and 50 pips of a stop when you are trading gold because it's an instrument that moves a lot. And if you place your stops very tight, they can be hit often, day after day after day, even if the market moves in the direction you are expecting. So I do not recommend using very tight stops on gold. If you are using gold for swing trading, that means your targets are large, they are big. And of course, with big targets, you can have a larger stop than usual. If you are targeting 250 pips, it's okay to place a stop of 100 pips. Always about the risk-reward ratio. I prefer it to be, of course, at least 1-to-1. And if it's 2-to-1, that's better. And that, of course, gives you the space to be a little more flexible when it comes to volatile instruments. When you want to place a stop at a volatile instrument, of course, your target is large, so you can have a large stop. But of course, manage your risk wisely. even if it's okay to place a stop at 90 or 95 pips, like we did here, 98 pips on today's long gold position. It's okay, of course, to place that kind of stop, but always pay attention to the size you are trading. You need to understand in dollar terms, these 98 pips, how much they are going to cost me out of my account. Convert that to dollars, and after you convert that to dollars, calculate the percentage of the loss if the stop is hit in regards to your account. So if your account is $10,000 and these 98 pips translates to $600, $500, $400, that's great. But if they relate to $2,000, then of course, obviously you are trading more than you should. So you need to lower the trading size. Always, always, guys. This is my advice to you, and it will never change. Every day you're going to hear me say the same thing. Always calculate the dollar value of your stop losses and then compare that to your whole account in terms of a percentage. If this percentage is 2 to 3%, that's fantastic. If you're a beginner, try to push it down towards the 1% until you gain enough experience. Up to 3%, in my own opinion, that's fantastic. Sometimes I push it to 5%, but I don't want to lose more than 5% on any one trade out of my account. And I prefer it most of the time to be 3%, not 5%. Sometimes it's okay to push it to 5% if I really believe in an opportunity there. But it's never okay. It is never, ever okay, guys, for you to place a stop that will cost you 15% or 20% of your account or something like that. That is extremely unwise, and it's extremely risky, and you're not managing risk. Simply, if you do so, you are not managing risk on your account, and that can be really, really expensive. Okay, more comments. Scalping, yeah, well, even a scalping can be good, buddy. But the problem with scalping on such instruments is that you need to place a stop that is actually a little bit larger than usual. So if you're targeting 10 pips, for example, on gold with a stop at 90 pips, that means one thing. It means that if you make money on 9 trades and then one stop is hit, then you are going nowhere. So yeah, I do not like to have very small targets when I trade any volatile instrument. On the top of that, of course, is the precious metal. Ram Hines says, yeah, that's why I asked. Yes, I'm very happy to answer your questions, so please keep them coming. Which indicator is that, Nick? I'm sorry, buddy. I don't know what you are talking about. Maybe this one? This is the commodity index. Yeah, it's an oscillator, very similar to other oscillators, like momentum. Not one of the main ones, to tell you the truth. I'm going to change that to RSI or stochastics or MACD, and I'm going to place a moving average here. Okay, so 35, I'm going to place blue and 49 in red. This is my code. I always use the same colors. Okay, and commodity channel index, I'm going to delete that. And I'm going to insert another oscillator. Yes. So this is it. I don't like grid that much, but of course it's up to you. So you tell me, guys, you like seeing grid on the chart, or not, please let me know. Okay, so with this, guys, with placing our order on gold, take a look at it again before we take our next break. It's going to be a very short break as well, 6-8 minutes, something like that. I'll try not to make it longer than that. And after, when we come back, guys, we are going to take a look at other instruments. If you have an instrument that you are really interested in, please let me know, because I'm gonna answer your requests, definitely. Maybe we'll be talking about pound, about the Canadian dollar. Canadian dollar is pushing above one important resistance. We need to take a look at that. Pound, of course, it's very exciting these days. A lot of people want to trade it. And of course, anything else that you may have in mind. For the time being, thank you very much for being here. Very short break, 5 minutes or so, and we will be back. In the meantime, let me remind you that this free and informative webinar that I'm trying so hard to fill with very important and useful pieces of information for your trading, guys, is sponsored by our favorite broker in the whole world, QTime FX. QTime FX is offering you the trading with very, very tight spreads and zero commission. This is the trick, guys. Some brokers give you fantastic spreads, but they make up for that with commission. So you are left where you were before, using these tight spreads. But no, not QTime FX. We offer you the chance to trade with very, very tight spreads, and we do not make for that commission. Zero commission guaranteed. 0.4 of a pip, euro dollar and the dollar yen. And of course, on top of that, open an account with QTime FX through us, through FX_educast via Telegram, and get $500 of free bonus. The magic word here is withdrawable. So this is a withdrawable amount of money. It is real money. It is not a trading credit that you can only use to trade, and then we are going to take away from your account. No. It is real green money. So what you're waiting for? Contact us at FX_educast via Telegram, and let's open this real account for you, where you can start applying the trading ideas that we are talking about every day. So with this, guys, see you in 5 minutes after the break, and we will continue doing what we love to do, finding the best opportunities in the market. See you in 5, guys. Okay, guys, we are back after this short break. I hope you had the time to think about the market, to think about what is it that you want to discuss, what instruments you want us to talk about. So, welcome back after this break, our last break of the day. We still have around 1 hour, around 50 minutes left in this webinar. And of course, I'm going to use each and every minute to try and give you the best opportunities in the market for the day. We were talking about gold before the break, and the signal, the only signal that I'm going to give you today for gold is this one. Only if we reach 1469, I want to be on the long side of the market. Below that, I would really think twice before taking a long position on gold. We might drop to the 40s any minute, but if we reach 1469, then we will be trading above the moving average band, and that by itself, of course, is a bullish fact, and of course, that will justify a long position. Buy at 1469, our stop is just a little bit less than 100 pips. 59.2. Watch out for 1473. If you are on a long position, we reach 1473. We are unable to break that level. Close it with any kind of profit, 20 pips, 30 pips, whatever it is. But if we penetrate through 1473, our initial target is 1479.2. That's 102 pips. And our real main, sweet, beautiful, ambitious target is 1494.3, which is 253 pips. So we are done with gold now. Please let me know if you want anything else analyzed. For me, I am going to be switching to the pound. I know you guys love the pound, especially these days. These are signals from last week. The short at 24.40, because we had support at 28.50. And of course, we closed the signal with a stop on profit, a stop of 20 pips. We sold at 29.12. This is one of last week's signals, but enough about last week. What we are trying to do here is to find fresh opportunities. That's why I'm going to adjust this trend line, the following trend line, from the first of the month high this looks good. As you can see, we have points that are very close to this trend line. Let me and of course, we don't need this anymore. I'm going to delete this and this. Okay, now this is good. Well, from first look, the recovery attempt I'm seeing from the lows that were reached late last week is now facing problems around the moving average area. And when this happens, of course, more weakness should be expected, like here. We almost touched the moving average area, and then we started falling again. Now, this is happening again, guys. A failure to break above this moving average band will not be good for the pound. But let me take a look at the indicators and see what they have to say. Yes. The stochastic in specific is telling us something. The fast line is trying to break below the slow line, and of course for this we need to wait for the close of the hour, guys. We are still only 9 minutes into the hour, and that means we need to wait for around 50 minutes before making any kind of decision. Now, we need to keep this in mind. By the close of this hour, And of course, the shape of the candle itself is going to be very helpful. If this close is weak with a top very close, or actually an exact top at the 49 simple moving average, and a bearish cross on the stochastics, I really believe that the pound could be in for a hard day ahead. Of course, given that the close of this hour is going to be bearish. So we're going to wait until the end of this hour and see what it is going to tell us. Now I want to take a deeper look at the recovery attempt. And the recovery attempt, which started, of course, with Friday's daily low. I think it was the lowest price for around 3 weeks. Yes, actually 22 days. From there, we started trying to recover. This is good, but with the failure that we have just seen on the hourly chart against the moving average, this may fail. But we do not want to jump into conclusions. We only are going to consider this recovery attempt a failure if we break below this rising trend line. Although this rising trend line is currently around 79, I'm going to consider it to be at these bottoms here. Of course, it's rising trend line. With time, of course, it's going to finally rise to this level. And if in the next few hours, of course, this is a 15-minute chart, so it's not going to take very long for this trend line to reach these bottoms here at 48. So the first thing I want to say is support is at 27.84, not 48, 84. That's great. This is the first observation for the time being. Support is at 27.84. Resistance, on the other hand, is at this trend line. And this trend line is currently at 28.30, but of course with time it's going to get lower and lower. In my own opinion, I'm going to consider it to be around these tops. Okay, this previous top is 22. So resistance is at 28.22. And of course, having the support and resistance relatively close to each other in such a way is extremely helpful in building a trading strategy. That makes it, of course, easy to place an order to buy when the resistance is broken to the upside, and an order to sell when the support is broken to the downside. And having them not really far from each other makes the stop on each entry reasonable. Let's see how we can translate that into trading strategies. So the support is at 27.84. How about a sell 10 pips, and I'm thinking out loud, below that with a stop 10 pips above the resistance? Does this look good to you? How many pips is that? 58, I think. Yes, it is 58 pips. 58 pips, of course, is reasonable. It's not a large stop, so we are going to okay that. Now, I'm going to give you 2 targets for each plan, for each recommendation. Okay. For that, I am going to take a look at the hourly and 4-hour chart. As you can see, guys, after the very sharp move to the upside, we have been moving sideways for a while. Now, it might be, if we break below a failure here at the moving average with a break below this trend line, points, of course, to the downside. Let me calculate the retracement levels for this move in order to get probable targets, probable downside targets. I'm going to use the 4-hour chart to get a better grip. For this last part of the move, this is what I'm focusing on. 27 is the minimum. If we want to talk about the key retracement levels for the previous move, 27 is the minimum. So my first target is 27, and my second target should be below that. How about the 50% level at 26.03? There you go. Here's our first recommendation for the pound for the time being. If the price falls enough to 74, we initiate a short position with a stop at 28.32. Our first target is 27, our second target is 26.03. Good trade. It looks very good from where I stand. But of course, what about if the price breaks above the falling trend line? Then we need to be on the long side of the market, and that of course is going to be at 28.32 with a stop at 27.74. But what about the targets? Let's calculate. Now, of course, between these two moving averages, we are expecting some kind of struggle for the bulls. But if we break above this trend line, let me delete this, does not make any sense now on the 4-hour chart. If we break above this trend line, then of course we can find resistance here, but that's a strength sign. So we will be optimistic against this resistance. But of course, that does not mean we don't need to watch it. We are going to watch it. However, above here, I'm going to use retracement levels. 72 is the first. That is 40 pips. Okay, I'm going to give you a limit of 40 pips. I know some of you guys don't like the 100 and 150 kind of targets. They of course, think, some of the traders think that they need a lot of time. And I don't want to be married to this trade. I don't want to be stuck in a trade for 4 and 5 days looking for 100 pips. Just give me the 30 pips for today, and I'm going to close my position. And that is, of course, it's a great way to look at the market. To each their own. Some people prefer larger targets. Some people want smaller targets. It's up to you, really. That's why I'm giving you 2 targets for every recommendation. So let me use these, not actually the 50% level. I'm going to use the top that is just above it, which is only 6 pips above it actually. This price stop here is 78 as my target, my initial target. So I'm going to give you a buy recommendation, 28.32, stop at 27.74, limit or target 1, let me call it. Target 1 at 28.78, and target 2 is going to be at the top from which this whole drop started, and that is, of course, 29.76. There you go, guys. I'm gonna change the colors. Okay, so these are my pound recommendations for the day. Support is, of course, at 27.84, resistance at 28.22, and we use these 2 levels to build these two trading recommendations: buying above resistance, selling below the support. I have said this many times in the past, guys. Keep your analysis simple. Some people, using very simple analysis techniques just won't do. And I hate to say this, but you guys are wrong. You don't need a very complex analysis tool or tools in order to achieve profit in this market. You do not need that at all. You need to keep your analysis simple and focus on the market. And when you use very simple analysis techniques, all you need to do is specify the right resistance, the right support, the ones that you believe that when are broken are going to result in moves in the direction of the break. And this is what we are trying to do here exactly. Buy above the resistance, sell below the support. I believe that these resistance and support levels are going to be important for today. And if we start trading above 28.22, I want to be on the long side of the market. That's why I'm buying at 28.32, stop 27.74, first target 28.78, second target 29.76. On the other hand, if the market starts trading below support 27.84, I want to be short 27.74, stop 28.32, initial target 27, target 2 26.03. Now, guys, I said before the break that we are going to take a look at the dollar Canadian because some important things are going there. When I opened the chart, I found this. Of course, this is from last week. Buy at 31.62, stop 31.07, and limit 32.40. We are almost, I think we touched that limit. Very close to it, 37. So if you're on the long side of the market, depending on this recommendation, you're doing good, you're doing very well. You are in a profit of 70 pips or so. Yes, in the 65 to 70 pips. But that does not matter right now. This is a recommendation from last week. What we are going to discuss now is what is going to happen today. And for that, I need to clean this mess a little bit. I'm going to remove all drawing tools and I'm going to calculate the retracements. As you can see, guys, when we take a look at the dollar Canadian chart, I'm sure you guys have noticed this. This is what I'm talking about right here. We are now testing the 61.8 retracement level for the previous drop from the high seen early in October until the low seen late in the same month. So of course, the Fibonacci 61.8 is one of the most important retracement levels there is. And this is calculated for a move that lasted just a little bit less than 1 month. So it's important. We're not talking about a move that took 2 or 3 days of the time of the market. We are talking about a 4-week drop. For 4 weeks, the price has been dropping until we found a bottom and from the bottom we started recovering, and now this recovery is around the 61.8 retracement level. This level is at 32.29, and this is going to be our resistance for the day. Now, what I needed to see here is that we do have a previous resistance that is very close to that. Do you see this, guys? 40, 40, exactly 32.40. So instead of 29, I'm going to assume that resistance for today, 32.40. This is the first thing that the chart is telling us. What about support? I want to switch to the hourly chart here so I can draw my trend line. I can focus on the last part of this move. Of course, we can draw the trend line from here. And we can draw another trend line from here. Sorry, not this one. Yeah. These are the two trend lines that I really believe will have an effect on the continuation or termination of this recovery attempt. As long as we are above this trend line, these two trend lines actually, then more upside should be expected. But once we start trading below both of these trend lines, then especially if that comes after topping very close to this Fibonacci level, as we are doing right now, without penetrating it with 20 or 30 pips, and then we start dropping, we break below these trend lines, that is an indication of weakness. So for the time being, this is an hourly chart. For the time being, this trend line, the first trend line, is around 31.92, and the second trend line is around 31.62. So we have 30 pips in between. My preferred one is this. Why is that? Because it's very close to the moving average. And you know me, I love my moving averages. I love them so much. And when I have two trend lines like this, like the situation in front of you, and I want to pick which one is more important, which one looks like the one I should count on when I build my trading strategy for the day, what I do is look for the moving averages. And I'm going to pick the one that is closer to the moving average. This one. So here, I'm going to use 32 as my support, with the resistance at 40, support at 31.92. That can give me the opportunity to build trading strategies for today, depending on the break of one of these two levels. So it's going to be something like this. Buy at 32.50, stop at 31.82. And of course, I'm going to have a sell at 31.82 and stop at 32.50. That makes a lot of sense according to the hourly chart, moving averages, Fibonacci levels, trend lines, every analysis tool that we have been using to analyze the Canadian dollar indicates that these two recommendations are supported on the chart. Now, let's go to the targets. Target 1, target 2, and of course, for the short position, we're going to have two targets as well. Target 1, target 2. So for target 1, for the long, let's first of all talk about the long position. What comes after 61.8? Yes, you guessed it, guys. Yes, you guessed it. It's a 71.4, my own retracement level. Is it far enough? No, it is not actually. It is definitely not far enough to establish a target for the long position. So I will just neglect that and maybe use the 88.6. Yeah, that makes more sense. 33.13 or 12 actually it is. 33.12. Okay, now we have an initial target. Can we still move higher than that? If the Canadian continue to move higher than that, do we have another target? And what better target can you find on this chart as a second target better than this top here at 33.83, the top seen early in September? So 33.83. Great. So now we do have, I don't know if I can color this differently. Yeah, okay. So they are both, they cannot be in different colors. So buy at 32.50, stop 31.82, target 133.12, target 233.83. What about the downside? If we drop enough to trigger a short position, which is going to be placed at 31.82, then that means that we are now trading below this trend line, and we are expecting the price to continue dropping lower. I'm going to use retracements to establish two targets. This looks like a fantastic target here because we do have a support. So the 61.8% level for this whole recovery attempt is at 31.23. Is that good enough for short at 82? Yes, it is. 31.23. That is 59 pips. It is okay. It looks like a good target, but we want more. I want a target that is much more ambitious than that. And for that, I'm going to simply use this bottom. Keeping my analysis very simple, 30.37. So I'm gonna 30.37. Gonna keep this here. Place my recommendations for the Canadian dollar here. Okay, guys. Let's summarize. We do have a resistance at 32.40. I want you to watch that. We do have a support at 31.92 for now. Okay, if we spend more time before we drop to this level, it's going to get higher. Of course, a pip or two each hour. So maybe from here until the American session, it's going to move higher, less than 10 pips. So it's okay if you want to keep it at 92. But if you update it, that's better. If we drop below the support, I want to be short. So that's why 32.50 is long. It stopped 31.82, 33.12, initial target 33.83, second target. Sell at 31.82, stop 32.50, initial target 31.23, and the much more ambitious target at 30.37. Okay, guys, so this is it for the Canadian dollar. Any questions, guys? Let me go back to the comments and see what is the last thing that we're going to analyze for today, depending on your comments. Renren, that is a name that I just heard today. I don't think you were with us or you have been a follower of our recent events, so welcome. We welcome you aboard It's very nice to have you with us. Nick, Ram Hines, is it true that Japan is going down? You mean as a country or the economy? Well, I'm not following news about the economy in Japan right now. My main focus is the Fed, honestly, and I'm looking for what the Fed will be doing. But I have not heard very bad news about Japan. I'm sure some of you guys follow the news more than I do. I'm a technical guy. I love the charts. I focus on the chart, not on the news. So maybe you have a better understanding of what is happening there than I do. Yeah, after the Olympics, yeah, well, probably. Maybe it's only a rumor like Nick is saying. So why not take a look at the chart of the dollar yen? And not only the dollar yen, I hope we will have time to take a look at the euro yen, because I really believe that we may have a very serious opportunity there. Let me start with, of course, let me first of all use my indicators and start with the daily chart. On the daily chart, Friday was not very good. It was not very bad, but it was not very good because we were trying to recover after depending on the support of the moving average band. As you can see here, we were trying to recover to the upside, and of course we reached good levels, but Friday was a red day. Indicators are still not giving signals, but they are very close. Look at this one. They are touching. Stochastic lines, the fast and slow, are touching. The MACD and the signal line are very close to each other, but we still don't have a signal. Of course, we need to see the MACD below the signal line, the fast stochastic below the slow, the RSI is starting to change direction to the downside, so that is not a sign of strength for the American dollar. If you take a look at this candle, it is bearish, of course. When you have small bodies with shadows coming after a move, that is an indication of reversal. Like, for example, this one. We have small body here after a recovery attempt to the upside after the strong green candle, small bodies, and after the small bodies, as you can see, we drop. Same thing here. We are trying to recover, then a small body appears, and then the drop starts. So, and don't forget that we talked about the 38 a lot. Let me show you why 38 is very important. We talked about it a lot last week. This is why 37, sorry, not 38, 37 is very, very important because it's the Fibonacci level. And just look at this unbelievable top here at 32, only 5 pips below this level, from which the price absolutely collapsed. So there is obviously a key resistance in the 930s. And we talked about this last week and the week before. We were talking about this resistance even when the price was around 107. It's a very important resistance. And now failure around this resistance, just like this time. Just look at what happened the last time we were here. Look at this. Now we are failing around the same level, and it's a Fibonacci level this time. It was not a Fibonacci level here because we were not reaching this low. And we needed to reach this low in order to calculate the Fibonacci levels. Now it is a Fibonacci level. It is a previous top that the price literally collapsed from. And that is why failure around here is very, very dangerous for the American dollar. Now, I really believe the yen is going to take control if we fail to break above 109.37. So 109.37, this is the first thing I want you to see. 109.37. Keep this in mind, guys. Key resistance. All caps. I'm gonna, not only all caps, and red as well. So you know that it is very, very serious. 109.73, I want you to keep your eyes on that level. Without breaking above this level, the dollar is doomed. And I really mean doomed. I'm not talking about 50 pips, guys. I'm talking about hundreds of pips. This is a Fibonacci level. This is the 61.8 for the move down from April top. And that means, of course, failure around this level can easily result in a drop that at least tests, if not dig below the previous low, previous bottom, which is 104.45. So can you imagine that, guys? Can you imagine us going back to 104.45? Is this what is going to happen next? A failure around this level will be the first sign that we are heading towards 104.45. So keep your eyes on 109.73, and what I really recommend is that you take sides depending on this level. While we are trading below it and we are trying to dig deeper, in my own opinion, a short is 100% justified. But in case the bulls can push this pair above 109.37, then that is going to be really bullish for this. Nick, hey Munther, hey Nick, come on buddy, shoot. What is it that you want to talk about? If you have a question, please shoot. Let me hear what you have to say. So guys, I stopped talking to you for a minute because I wanted to focus on the chart 100%. And this is what I come back with. As you can see, we do have a rising trend line that connects the daily highs for October 1st, October 15th, 17th, and October 30th was very, very close to it. And again, November 7th was very, very close to it. This is an amazing trend line. I like it very much. Another trend line that I need to show you is the one connecting October 3rd low, October 4th low, October 31st, and November 1st. These are two trend lines that can be extremely helpful in estimating the chances of moving to the upside or to the downside. Another observation that I really want you to pay attention to is this one. This is the moving average band. You know me, I love my moving averages. The current daily low is almost an exact touch at the beginning of this moving average band. Now the low is 108.89. The moving average is there. It's maybe 108.88, maybe 1 pip or something like that. They are very, very close to each other. This moving average band stretches down to what? To 108.74. And at 108.68, we do find the 50% level for the last part of this recovery attempt, which started on October 31st. So this means that, guys, we do have an important support area starting from the 89, the current daily low, down to 68. Let me write this down. So these are the two levels that I really need to care about for now. Unfortunately, they're not very close to each other because the bottom of the support area is at 108.68, while the resistance is at 109.37. That's almost 70 pips between the two. When we have 70 pips between the two, of course, what is going to happen is that we're going to have a larger stop than what we wish for. Now, guys, what I want you to pay attention to here is the distance between the support and resistance. And I did not complete this. I just said to myself, let's check if a buy 10 pips above the resistance and a sell 10 pips below the support, the bottom of the support, of course, makes sense. And this is almost a 90 pips, 89 pips actually, of a stop. And lately, of course, we did reach 49, so this is going to be here. But it's a second attempt, so I think when we reach 49, we're going to continue moving to the upside. So this is an 89 pip stop. It is, I would of course prefer it if it was only like 70, but it is still within the range that is acceptable to us. Now, I'm sure you remember we talked about retracement levels. We have the next retracement level at 1013. This is target 1. I want to take a look at target 2. I want to look for a target 2, see where can we find that. Blew it because it's so long. I like using colors, different colors for different recommendations. This is the retracement level I'm talking about, 71.4. And let's talk about, let's also calculate the 78.6 or 88.6. So 1013 and 1150, they are retracement levels for the same move that produced the amazing resistance of 109.37. So this is the long recommendation for now. How about the short? The short, of course, is going to be a reverse. Sell at 108.58. Our stop should be only if we start trading above 109.37, and that means, of course, 109.47. Now, target 1, target 2. Nick, buddy, I'm still waiting. You said, hey, Munther, and I'm still waiting for what you are going to say. So if you have any question, please let me know. If you have any question, we still have like 10 minutes. So I hope that I have time to answer if you have a question. Okay, now the short, guys, the short is going to be very exciting. Why? Of course, I'm going to follow the break that happens. If we start trading above 37, that's a long. If we start trading below 108.68, that's a sell. Okay, but which one do I prefer? I'm going to tell you a secret. I really prefer the price to go lower from here. That would confirm the importance of 109.37 as a key resistance. This is one. And two, that has a larger target. So our targets to the downside, because we failed at a Fibonacci level, a previous stop from which the price collapsed more than 500 pips. What I have on my hand here is a short recommendation with a larger target. However, I'm going to give you a target 1 as a small target for you guys who like your 30 and 40 pips, but I'm going to take the full force of technical analysis in order to give you a fantastic second target. So target 1, if we break below this, then we might start dropping towards this bottom here, maybe just a little bit before that. And when I suspect that the market's going to a bottom, but I want to place my limit just below this bottom, I use the 88.6 retracement level. Here it's at 108.06. This is where I am going to place my $109.47 and target 1, guys, at 108.06. Yeah, 52 pips. That's reasonable. But the second target, I hope I'm not going to surprise you when I'm going to say it. It is this bottom, guys. 104.40. What? What did you say, Munther? You heard that right, guys. $104.40. Do you mean that we have a potential of 400 pips to the downside? That is exactly what I mean. For you guys who like your targets very close, you want a day trade, you want to close your trades in a matter of hours or during 24 hours, maximum 48 hours. use the first target, okay? But for you guys who have enough patience, I recommend that you follow the second target on the short position or on the short recommendation. It's a recommendation until now, it's not a position yet. So you guys, this is what I really believe is going to happen. If we continue to fail around 109.37, we're not talking about a drop of 50, 60, 70 pips to the downside. I'm not talking about that. A failure, a second failure at 109.37 is going to devastate the dollar yen. And the yen is going to get really angry, and it's going to take full advantage of the dollar weakness and the dollar failure to break above 109.37. So that is why I have chosen to give you a target that is really, really far from current levels. So to sum up, guys, if we start trading above 109.37, that is a long. We are placing our order at 109.47. Our stop is 108.58. Our first target is 10.13. That's how much? That's 66 pips. While our second target is much more ambitious. It's 203 pips at 11.50. But this is not my favorite trade. My favorite trade is this short. Sell at 108.58. Stop at 109.47. Initial target at 108.06. And my real beloved target is going to be at 104.40. Not a bad target, huh? I really hope you guys enjoyed this webinar. And with this, of course, with talking about the dollar yen, we are at the end of this webinar. 3 hours, they went by like this because I enjoy talking to you guys all the time and every time. And as you guys know, 21 hours from now, we are going to meet again. I want to join the chat with you guys. I'm gonna send a hey, hello, hi to everybody. Hey guys. I love talking to you, know that. You know how I like that. If you have any question, if you have any request, I am here, of course, to answer your requests, of course, with a smile on my face, like it is always the case. So please shoot, ask me for anything you want, request anything you want. Of course, I'm talking about tomorrow because we are done for the day. I'm very excited about these trading opportunities. I will be keeping my eye on all the trading opportunities that we talked about today, especially the short yen, the short dollar yen, and if there's a potential for a long on gold. So these are the two things that I'll be keeping my eye on. And of course, if the euro drops towards 109.95, I'm going to be ready to get in on the long side of the market. Okay, guys, any questions before we leave? Thank you very much for being here. It has been a pleasure. As always, I love talking to you guys. I want to see you all again 21 hours from now. And I'm going to be here with fresh opportunities and with updates to the trading opportunities that we talked about. Today, I am going to offer you new trading opportunities tomorrow. And if we are in on any of these trading recommendations that we talked about today, I'm going to update that, update the stop, update the technical situation, so you guys will be on top of your trades all the time with me, when you are with Munther, when you are with FX Educast, when you are with QTime FX, then you are on the top of your trades. And of course, this reminds me to give a huge thanks to QTime FX, our favorite broker in the whole world, who is offering you guys unbelievable spreads, very, very tight, very, very low spreads. And of course, we do not cover that with commission. We give you great spreads and we so you guys can achieve the kind of profit that you want to achieve in the market. With tight spreads, that is easier. With zero commission, that is easier. With $500 of real green money in your account as a free welcome bonus from us, it is easier. So what are you waiting for? Come join the fun. Open your account. Contact us at FX_Educast via Telegram. Let's open this account for you. Let us do this together. An account where you can trade with fantastic spreads, where you can get your $500 of bonus, and where you can apply the trading opportunities, trading ideas that I am talking about here today, every day, just for you guys. And you know why we are doing this? We are doing this because QTime FX wants you to make money. That's why they are giving you these analysis sessions for free. They are paying me on your behalf, so I come here every day and find the best trading opportunities for you guys so you can make money trading with QTime FX. And that is something that if I was a trader looking for a broker, it would be something that I really, really appreciate. So we appreciate how QTime FX is thinking. They want you to make money, and this is fantastic. They want you to see the best opportunities in the market, and that is fantastic. They want to give you very tight spreads, and they don't want to take any dollar out of your account in commissions. On the contrary, they are paying you $500 and a free bonus. So why wait? Why hesitate? You have the best offer from the best broker, QTime FX. To open your account, contact us at FX_Educast right now, and let's open this account for you. Thank you very much all for being here. 21 hours. I'll be counting those hours until we meet again, until we find fresh trading opportunities tomorrow. Love you guys so much. Take good care of yourself. Take good care of your account. Take good care of your trades, and see you again tomorrow. Bye-bye, everybody.